So the question you have to ask is this going to add to the services number? Is it going to add to that TAM? And the short answer, yes, it will. But all these features don't get released into September. And of course, there's a lot of announcements, a lot of competition out there. People are wondering, will Google come up with something? Will OpenAI come up with something? Will Facebook come up with something? But at the end of the day, if you have the data, the devices, and the network, you're going to win.
It feels like the narrative hasn't really changed then. I feel like the story we've gotten since they unveiled Apple Intelligence is that it's just going to take time. Like, how long can we afford to be patient with Apple on this?
Well, if you look at the cash on hand and you look at the stock, they can afford to be patient for quite some time. But I think it's a different issue, right? It's a consumer brand. It's about trust. And if they launch it and it's awful, what would happen? The market would tank even further. And so for in their case, they have to get it right, almost to a level of perfection that nobody else is going to expect. I mean, this is like the equivalent of any large company that's, 1% to 2% of any index, right? If they screw up, the entire economy screws up. That's a huge burden on them.
Well, look, Ray said a lot in there that I do agree with. This is clearly an incredible company. He mentioned just the sheer volume that they have in terms of data, in terms of devices, the fact that it is a $400 billion ecosystem. That's how much money they make in revenue per year. They also generate $100 billion in profit. They just bought back $100 billion worth of shares. As he says, Apple has a lot of cash. It's an incredible company. But I don't think that means it's an incredible innovator. And this is the core of my problem with Apple. And this is where I disagree with Ray here. I think this is a mature company that is cosplaying as a young growth company. And so far, I think it's got Wall Street's number on that front. It's trading at 32 times earnings, and that is a growth valuation. Look at Google, which trades at 19 times earnings as an example. I believe personally, and we're seeing it with that decline in the stock, I believe this is the beginning of the end of the growth era for Apple. And I believe that multiple, 32 times, I believe that multiple will come down significantly this year. That doesn't mean that it's a bad stock, and it doesn't mean that it's a bad company. I just think investors need to recognize sooner rather than later that this is no longer the tech-forward company that it used to be. This is a mature company. Claire and Ray said it. We have to be patient with this company. We have to wait. And that's fine. It's fine to be a mature company. And as Aswath Damodaran has told us many times on this podcast, getting old is a part of life. It's not an issue. But we all have a choice. We can either run away from getting old or we can embrace it. And at this point, I think it should be clear to all of us, to Apple and to analysts and to investors, Apple is an old company. It deserves a mature valuation, not a growth company. I'm tired of pretending that Apple is this young buck that just came onto the scene. This isn't OpenAI. This is an old company that has lost its ability to innovate in the same way it did 10, 20, 30 years ago. Apple is old. Let's stop pretending it isn't. Our final story, Tesla stock got hit with 2 downgrades from Wall Street yesterday. Equity research firms August Research and Baird both cut their Tesla ratings from buy to hold. And that was, of course, a reaction to this insane feud that has unfolded last week between Elon Musk and President Trump, which led to Tesla's largest one-day drop ever, falling 14%. It had a bit of a rebound on Friday, rebounded a little bit more yesterday, but it's still down 11% since all this drama went down. So clearly, Wall Street is pretty spooked about this Trump situation. Clearly, investors feel that something has changed. And I think the question is, what exactly has changed? So to answer that question, Claire spoke with Bill Selesky, senior research analyst at August Research. He's one of the analysts who downgraded the stock yesterday.
Yeah, we did it because, and keep in mind, we didn't downgrade it to a sell. We downgraded it from a buy to a hold. And basically what we did, we just thought that the riskiness of the stock basically got amped up with the debate, so to speak, that went on last Thursday between Elon Musk and the president of the United States. So we saw that situation developing, and it kind of got ugly for a few minutes there. Basically, at its most simplest, Elon Musk versus the president of the United States, who's going to win that war?
It seemed like the market loved it when he was finally like, okay, I'm backing out of Doge. I'm leaving the government. I'm going back to Tesla 24/7. Do you think the concern here is that like he's obviously still thinking about the government and Tesla is not his priority? Is that the concern?
Yeah, it looks to me like, the blow up is starting to slowly, dissipate. And I hope it does, but that there's no guarantee that it couldn't start up again in a hurry. And if that's the case, then I don't necessarily think that, Tesla is in a position to tell a president of the United States, where to go or what to do. They're at the mercy of the president. So I think they have to, play ball with him, play nice. And hopefully everything will work out, and that part of the Tesla story will be long gone, and they'll work towards gaining back some market share. And for the time being, we believe it's kind of neutralish. We kind of see the stock trading sideways for a while, and basically it should pick up once we get some more clarity on how robotaxi's doing and what his plans are for Optimus rollout in the future. So we do think there's value there. We just think in the meantime you have to sit tight and kind of get through a couple of things first.
To me, this whole drama, when you look at it from both a political perspective and from a market's perspective, this whole thing is a giant distraction from the things that actually matter. I can break it down on the political side. This is a distraction from all the things that matter, which would include the big, beautiful bill, which is going to run up trillions of dollars in more deficits and decimate the economic prospects of my generation of young people. We've talked about that. It's a distraction from the tariffs, which are going to reintroduce inflation, which is going to further harm poor people. It's a distraction from the fact that we have ruined our reputation as a reliable trading partner. It is a distraction from all of the things that actually matter. This is just a tiff. It's just a fun story. And that's my view on it from the political side of things. Now, where do I land on this from an investment perspective? I see it as the same thing. The way I see it is Tesla is a car company that is trading, even after this dispute, at 162 times earnings. And that is over 400% higher than the average PE multiple across the auto industry.